5% for the current year, that is 21-22, and this consists of 7.9% in Q2, 6.8% in Q3, and 6.1% in Q4 of 21-22. Real GDP growth for Q1 of next financial year, that is 22-23, is projected at 17.2%. Let me now turn to inflation. Headline CPI inflation at 5.3% in August registered a moderation for the second consecutive month and a decline of 1 percentage point from its level in June 2021. The key driver of the disinflation has been the moderation in food inflation, even as fuel inflation eased up and CPI inflation excluding food and fuel, that is core inflation, remained elevated. Headline inflation continues to be significantly influenced by very high inflation in select items such as edible oils, petrol and diesel, LPG and medicines. On the other hand, a very low seasonal buildup in vegetable prices, decline in cereal price, a sharp deflation in gold prices and muted housing inflation have helped to contain inflationary pressures. Going forward, several evolving factors provide comfort on the food price front. Its momentum is expected to remain muted in the near term. Cereal prices are expected to remain soft due to likely record Kharif food grains production and adequate, or rather more than adequate, buffer stocks. Vegetable prices, a major source of inflation volatility, have remained contained in the year so far, with record production and supply side measures by the government. Unseasonal rains and adverse weather-related events, if any, in the coming months are, however, upside risks to vegetable prices. Supply side measures by government for edible oils and pulses are helping to temper price pressures. However, an uptick in prices of edible oils is seen in the recent period. Overall, the CPI inflation momentum is moderating, which combined with favorable base effects in the coming months could bring about a substantial softening in inflation in the near term. Taking into consideration all these factors, CPI inflation is projected at, for the current year, the CPI inflation is projected at 5.3%, and the breakup for the quarter-wise breakup would be as follows. This 5.3 is for the full year, and quarterly projections I will now give. 5.1% in the second quarter, 4.5% in the third quarter, and 5.8% in the fourth quarter of 21-22, with risks broadly balanced. CPI inflation for Q1 of next financial year, that is 22-23, is projected at 5.2%. We are watchful of the evolving situation and remain committed to bring it closer to the target in a gradual and non-disruptive manner. I would now like to give some guidance and review of, I would now like to review the current liquidity and the financial market conditions and attempt to provide some forward guidance. At the current juncture, central banks across the world, let me repeat, at the current juncture, central banks across the world find themselves at crossroads. Diverging monetary policy stances are not being dictated by country groupings, but by country circumstances. Among the emerging market economies, that is EMEs, some are tightening monetary policy, others are undertaking further monetary stimulus, while a few are on a resolute pause. The countries that are tightening monetary policy are those which are facing inflation much above their upper tolerance bands and are also registering a strong rebound in growth above pre-pandemic levels, boosted mainly by commodity export earnings and positive spillovers from improvement in macroeconomic conditions in some advanced economies. Countries that are easing monetary policy through non-rate actions are rare few which have low consumer price inflation. And finally, countries which are on a resolute pause have inflation in the elevated zone but poor growth prospects or nascent recoveries that need further nurturing. In India, the MPC has maintained a pause and given time and state contingent forward guidance from time to time on maintaining accommodation. The conduct of monetary policy in India will continue to be oriented to our domestic circumstances and our assessment. Since the onset of the pandemic, the Reserve Bank has maintained ample surplus liquidity to support a speedy and durable economic recovery. The level of surplus liquidity in the banking system increased further during September 21, that is in the last month, with absorption under the fixed rate reverse repo, variable rate reverse repo, or what I call VRRR of 14 days, and fine-tuning operations under the liquidity adjustment facility, that is LAF, averaging 9 lakh crore, rupees 9 lakh crore per day against rupees 7 lakh crore during June to August this year. The surplus liquidity rose even further to a daily average of rupees 9.5 lakh crore in October so far, and that is the position up to 6th October. The potential liquidity overhang amounts to more than 13 lakh crore, 13 lakh crore. As the economy shows signs of emerging from the COVID-19 inflicted ravages, a near consensus view emerging among market participants and policymakers is that the liquidity conditions emanating from exceptional measures instituted during the crisis would need to evolve in sync with macroeconomic developments to preserve financial stability. This process has to be gradual, calibrated, and non-disruptive, while remaining supportive of the economic recovery. The Reserve Bank's secondary market GSEC acquisition program, that is GSAP, has been successful in addressing market concerns and anchoring yield expectations in the context of the large borrowing program of the government. Coupled with other liquidity measures, it facilitated congenial and orderly financing conditions and a conducive environment for the recovery. The total liquidity injected into the system during the first 6 months of the current financial year through open market operations including GSAP was rupees 2.37 lakh crore as against an injection of 3.1 lakh crore during the full financial year of 2021. So against the total of 3.1 lakh crore which was injected in the whole of last year, this year, in the first half, for the first 6 months, in the first half, 2.37 lakh crore has already been injected. Given the existing liquidity overhang, the absence of a need for additional borrowing under GST compensation, and the expected expansion of liquidity in the system as government spending increases in line with budget estimates, the need for undertaking further GSAP operations at this juncture does not arise. The Reserve Bank, however, would remain in readiness to undertake GSAP as and when warranted by the liquidity conditions, and also continue to undertake and flexibly conduct other liquidity management operations including Operation Twist and regular open market operations, that is OMOs. With the resumption of normal liquidity operations since mid-January 2021, the 14-day variable rate reverse repo, that is the 14-day VRRR auctions, have been deployed as the main instrument under the liquidity management framework. Market appetite for VRRRs has been enthusiastic. Moreover, the higher remuneration which VRRR offers vis-à-vis the fixed rate reverse repo is also rendering the VRR relatively attractive. Keeping in view the market feedback, it is proposed to undertake the 14-day VRR auctions on a fortnightly basis in the following manner. Rupees 4 lakh crore today as already notified, rupees 4.5 lakh crore on October 22nd, rupees 5 lakh crore on November 3rd, rupees 5.5 lakh crore on November 18th, and rupees 6 lakh crore on December 3rd. Further, depending upon the evolving liquidity conditions, especially the quantum of capital flows, the pace of government expenditure and credit offtake, the RBI may also consider implementing 14-day VRR auctions with 28 the RBI may also consider complementing the 14-day VRR auctions with 28-day VRR auctions in a similar calibrated fashion. The Reserve Bank also retains the flexibility to conduct fine-tuning operations of varying amounts as and when required. Even with all these operations, I repeat, even with all these operations, the liquidity absorbed under the fixed rate reverse repo would still be around rupees 2 to 3 lakh crore in the first week of December. Now let me pause here and just stress and highlight some of the key takeaways of what I have said. First, we are providing a calendar for liquidity, for the VRR auctions alone, for the 14-day VRR auctions alone. The calendar is only for that segment of our liquidity management. And the rest of it, that is whether it is fine-tuning or if and when we think of 28 days, they are not predetermined and they will depend on the evolving liquidity situation. That's the first point. Second point, the entire exercise is based on our assessment of the liquidity conditions and the outlook in consultation with market participants and other stakeholders of the economy. So it's not a unilateral action. There has been considerable amount of dialogue and discussion between the Reserve Bank and the market participants. Third, the entire exercise is optional. In fact, in a manner of speaking, in the VRR, although V stands for variable, we could say that V would also represent voluntary. It's voluntary, it is optional, there is no compulsion on the banks to put any amount, a particular amount of liquidity under this window. Fourth, our entire approach is one of gradualism. We don't want suddenness, we don't want surprises, it's one of gradualism. And more so, we do realize that as we are approaching the shore, when the shore is so close, we don't want to rock the boat because we realize that there is a life, there is a journey beyond the shores. So we don't want surprises, it will be calibrated, it will be an approach of gradualism. And fifth and finally, I would like to sum up all these 4 points which I have said. Let there not be any concern about the adequacy of liquidity in the system to support economic activity or to support financial markets. Let me reiterate, as I just now said, let me reiterate and re-emphasize that VRR auctions are primarily a tool for rebalancing liquidity as part of our liquidity management operations and should not be interpreted as a reversal of the accommodative monetary policy stance, of our accommodative policy stance. The Reserve Bank will ensure that there is adequate liquidity, as I just now mentioned. The Reserve Bank will ensure that there is adequate liquidity to support the process of economic recovery. The Reserve Bank will continue to support the market in ensuring an orderly completion of the borrowing program of the government. And further, our focus on orderly evolution of the yield curve as a public good also continues. Against this backdrop and based on our continuing assessment of the macroeconomic situation and financial market conditions, certain additional measures are also being announced today. The details of these measures are set out in the Statement on Developmental and Regulatory Policies, which forms the part B of our monetary policy statement. And as you would be aware, a copy of my statement, the statement of the Monetary Policy Committee, including the part B, which includes the announcements which I am going to make now, all that will be uploaded in the RBI website immediately after my address to you is over. Now let me now highlight on these additional measures very briefly. The first one relates to on-tap special long-term repo operations, that is SLTRO for small finance banks. A special 3-year long-term repo operations SLTRO of rupees 10,000 crore at the repo rate was introduced for small finance banks in May 2021. This facility is currently available till October 31st. Recognizing the need for continued support to small business units, micro and small industries and other unorganized sector entities, it has been decided to expand this facility till 31st December and make it available on tap. The next announcement relates to introduction of retail digital payment solutions in the offline mode. A scheme to test technologies that enable digital payments even in remote areas where internet connectivity is either absent or barely available was announced in August 2020. Given the encouraging experience gained from the pilot tests, it is now proposed to introduce a framework for retail digital payments in offline mode across the country. This will further expand the reach of digital payments and open up new opportunities for individuals and businesses. The next announcement relates to enhancing transaction limit for IMPS to rupees 5 lakh. Immediate Payment Service, that is IMPS, offers instant domestic fund transfer facility 24/7 through various channels. In view of the importance of the IMPS system and for enhanced consumer convenience, it is proposed to increase the per transaction limit from rupees 2 lakh to rupees 5 lakhs. The next announcement relates to geotagging of payment system touchpoints. Ensuring wider availability of payment acceptance infrastructure throughout the country has been one of the priority areas for financial inclusion. To target areas with deficient payment acceptance infrastructure, it is proposed to introduce a framework for leveraging geotagging technology for capturing exact location information on all existing and new payment acceptance infrastructure, that is point of sale, that is POS terminals, and quick response codes, that is QR codes. This would complement the Payment Infrastructure Development Fund PIDF framework of the Reserve Bank in ensuring wider geographical deployment of payment acceptance infrastructure. The next announcement relates to regulatory sandbox, and we are announcing a new theme for the next cohort, and we are also putting it the whole system of application on tap. The Reserve Bank's regulatory sandbox has so far introduced 3 cohorts, namely retail payments, cross-border payments, and MSME lending, with a view to provide further impetus to fintech ecosystem. A 4th cohort on prevention and mitigation of financial frauds is being announced today. In addition, based on the experience gained and the feedback received from stakeholders, it is proposed to facilitate on-tap application for earlier themes for participating in the regulatory sandbox. This measure is expected to ensure continuous innovation in the fintech ecosystem of our country. The next announcement relates to review of Ways and Means advance limits and relaxation of overdraft facility for the state governments and the union territories. To help the states and union territories to manage their cash flows amidst continued uncertainties on account of the pandemic, it has been decided to continue with the interim enhancement of Ways and Means advance limits of rupees 51,560 crore for the states and union territories for a further period of 6 months, that is up to 31st March 2022. It has also been decided to continue with the liberalized measure, that is enhancement of the maximum number of days of overdraft in a quarter from 36 to 50 days and the number of consecutive days of overdraft from 14 to 21 days up to March 31st, 22. Priority sector, next announcement relates to priority sector lending, permitting banks to on-lend through NBFCs, continuation of this facility for some more time. Considering the increased traction observed in delivery of credit by NBFCs to the underserved and unserved segments of the economy, bank lending to registered NBFCs other than microfinance institutions for on-lending to agriculture, MSME and housing was permitted to be classified as priority sector lending. This facility, which was available from 13th August 2019 till September 30th this year, is being further extended for another 6 months up to 31st March 2022. And the final and the last announcement relates to internal ombudsman for NBFCs. The increased strength and reach of NBFCs across the country has necessitated various measures by the Reserve Bank for protection of customers of NBFCs. With a view to further strengthening the internal grievance redress mechanism of NBFCs, it has been decided to introduce the internal ombudsman scheme for certain categories of NBFCs having higher customer interface, and the circular as and when it is issued will spell out the details. It will be issued shortly. Let me now conclude and let me say as follows. If there is anything that the most trying and difficult past 18 months have taught us, it is to never doubt the indomitable human spirit which always rises to face mighty challenges. With our resilience and resolute commitment, we have learned to adapt, innovate, and turn challenges to opportunities. As we further accelerate the pace of economic recovery, it is important not to rest in the glory of what has been achieved, but work tirelessly on what remains to be done. As Mahatma Gandhi, whose birth anniversary we celebrated last week, had said, to lose patience is to lose the battle. Thank you. Stay safe, stay well. Namaskar.
तो आरबीआई गवर्नर शक्तिकांत दास की प्रेस कॉन्फ्रेंस आप सुन रहे थे। तीसरी द्विमासिक मौद्रिक नीति की यहां पर घोषणा की गई है। सीआरआर रेपो रेट, रिवर्स रेपो रेट में कोई बदलाव नहीं है। आरबीआई की मौद्रिक नीति की घोषणा हुई है। सीआरआर 4% पर ही रहेगा, रेपो रेट 4%, रिवर्स रेपो रेट में 3.35%, ये उसी रेट पर कायम है, कोई बदलाव नहीं किया गया है। ब्याज दरों में कोई बदलाव नहीं है और अर्थव्यवस्था में सुधार के संकेत हैं, ये कहा गया है शक्तिकांत दास की ओर से। पूरी तरह सुधार आना अभी बाकी है। आर्थिक गतिविधियां तेजी से पटरी पर आ रही हैं, ये बताया गया है। सभी एमपीसी सदस्य दरें बरकरार रखने के पक्ष में थे और सभी दरों को अभी बरकरार रखा गया है, कोई किसी तरह का बदलाव नहीं किया गया है नीतिगत दरों में। श्यामा हमारे साथ जुड़ चुकी हैं मुंबई से, उनसे हम बातचीत करेंगे। श्यामा, कोई बड़ा बदलाव नहीं किया गया है, लेकिन ये जरूर कहा गया है कि जो अर्थव्यवस्था है उसमें सुधार के संकेत हैं, पूरी तरह सुधार आना बाकी है। जो कोविड का दौर था, जो दूसरी लहर का दौर था, उसका बहुत ज्यादा असर अर्थव्यवस्था पे देखा गया है, लेकिन अभी जो आंकड़े सामने आ रहे हैं उससे ये भी साफ है कि अर्थव्यवस्था अब धीरे धीरे पटरी पर आ रही है। क्या कहेंगी?
बात करें तो हमने पहले भी बहुत जो पॉलिसी मंथली पॉलिसी रही है गवर्नर की, उसमें गवर्नर बार बार कहते रहे हैं कि हम अपने इंडियन इकोनॉमी में ग्रीन शूट्स देख रहे हैं, यानी कि यहाँ पर चीज़ें सुधरती हुई नजर आ रही है। उसके बीच में सेकेंड वेव आया, सेकेंड लॉकडाउन आया, साथ ही अब हम कह सकते हैं वो उसका असर जो है अब वो धीरे धीरे खत्म हो रहा है, सेकेंड लॉकडाउन का और सेकेंड वेव का। लेकिन एट द सेम टाइम हमें बहुत ज़्यादा सतर्क भी रहना होगा, क्योंकि थर्ड वेव का हमारे सामने खतरा बना हुआ है। गवर्नर हमेशा ये बात कहते रहे हैं कि किस तरीके से आरबीआई मेजर्स लेता रहा है और लेता रहेगा इकोनॉमी को सपोर्ट करने के लिए, ग्रोथ को सपोर्ट करने के लिए। क्योंकि हमने जब पहले भी बात की थी तब हमने ये बताया था कि ग्रोथ अभी फिलहाल हमारे भारतीय अर्थव्यवस्था में काफ़ी नेसेंट स्टेज पर है और उसे सपोर्ट करने के लिए पॉलिसी की बहुत ज़्यादा ज़रूरत है। तो इसलिए ये पॉलिसी को वो मेजर्स लेते जाया जाए कि पॉलिसी सपोर्ट करती रहे ग्रोथ को, ये एक इम्पॉर्टेंट फैक्टर है यहाँ पर। और इसीलिए ये भी हमने देखा इस बार में कि वैसे सारे मेजर्स अनाउंस भी किए गए हैं। जिस तरीके से हमने पहले ही बात की थी कि एक्सपेक्टेड लाइंस पे स्टेटस को मेंटेन करेगा आरबीआई, उसी तरीके से एमपीसी जो कमिटी है उन्होंने यूनानिमसली डिसाइड किया है, एक साथ डिसाइड किया कि कोई बदलाव नहीं होगा, कोई छेड़छाड़ नहीं होगा की रेट्स में। तो आप रेपो रेट की बात कर लीजिए, रिवर्स रेपो रेट की बात कर लीजिए, वहां पर कोई बदलाव नहीं हुआ है। साथ ही हम